Hello to everybody present on the stream. This is Inka from IET presenting Escape Room 2 featuring Mr. Vivek Trivedi, who is the CEO and founder of Investment Funda and who's also a very good financial expert. Today's session will be based on the topic of personal finance, which will be in the form of an interview conducted by me, Mohammed Ibrahim, and Crowny Rao. And the session will end with a question answer session where the audience can clear up any doubts or clarify any queries that they think that we missed on, and sir will definitely address those. So today we have Mr. Vivek Trivedi.
My name is Vivek Trivedi. I am founder of the firm Investment Funda. We are into this business of distribution of financial product for the last 20 years. It's a wonderful work to do. I love my profession. I get to meet some really wonderful people like you. So that's how I find this profession to be very, very interesting. And thanks for inviting me.
You're welcome, sir. Hello, I'm Crowny and I'm from NCART. So let's get started. So now we know, as we have a very big generation gap between our generation and your generation, so our generation don't even visit the banks. So now as I'm in my second year and I'll soon get a job, why should I have long-term investment plans and savings? Like I have a well-paying job, right?
It's a good question, very good question, because yesterday I came across a person who didn't know what a check was. And I was kind of, I just wondered how to explain it to him. Okay, you have not going to the banks, but you are routing most of your investment or most of your transaction through an app or a website of the bank. You have a well-paying job, good. A hypothetical situation, I'm telling you, it is always advisable that you start your savings and investment early in life. The earlier you started, the better it is. It will give your investment that much more time to grow. There's a saying in the stock market, the early bird which catches the worm. So be an early bird, start early, and that is the time when you have least amount of expenditure. Like you don't have to take care of your household expenditure, you don't have to take care of the kids, you don't have to take care of their education. You don't have any expenditure as such. So why spend everything? You can, in fact, it is a time when you can do the maximum saving. And this particular saving done early in life will always help you throughout your life. So be an early bird, start early. Earlier you started, better it is. And you will be starting at a time when you have a lot of money at your disposal. So do it at that time. No other time to start it, better than when you are just joined the job.
I guess everyone, like most of the audience is college students, so they will keep this in mind.
So I think one of the biggest queries that everybody present on the stream who are mostly college students will have is that how much knowledge should I know about, say, investments and mutual funds and the share market and stocks, and how much information do I need to know about investing and saving, so that I can actually practically go and do it. Do I need to be an expert like you, or do I need, or could I start today and learn on the go? So my question is, when is the right time to start investing? Can I start now, or do I need to gain a lot of knowledge and then only I can go ahead with it?
Okay, one very important saying in the stock market is that yesterday was the best time to invest. And second best time to invest is today. Tomorrow never comes. So you can start with some basic knowledge. You don't have to know everything because that's not your job. You are basically engineers. If you learn everything and then you start investing money, you will be doing two jobs at the same time. What you could do is you can route your investment initially through a mutual fund distributor or a mutual fund advisor. There is a difference between the two. There's a difference between who a mutual fund advisor is and who a mutual fund distributor is. So you can route it. You need to have a little basic knowledge. And more than knowledge, you need to know why are you doing it. What is more important is what is the final result you are looking at, and what is the time duration you want to keep the investment going for. That's most important. And you have to start investing with a purpose or goal in mind. If you have a clear-cut goal in your mind, then that investment remain for long. So have a goal in mind. You can start with a small amount, and you can start it with some kind of a basic knowledge about investment. But one thing is very clear. Whenever you start an investment, do it for long term. Doing investment for the long term is the most important thing. Here I would like to share an example. Example of Bombay Stock Exchange. Bombay Stock Exchange, when it was formed, it was 100. Today it is at 50,000. It's an annualized compound return of 16%, including the dividends which companies have been giving. 16%, no other financial instrument has been able to give you. That is the kind of possibility that is there in stock market. But in the short term, it is highly volatile. Long term, it is more stable. So longer the investment is, the better it is for everybody.
I think so that clarified a lot of doubts about investment, that there is no need to be an expert, stick to our fields, but also have some basic knowledge so as to not be fooled around, but who could, so that you can be an investor with some smarts and can go about doing well with your money as well.
Well, so now, for example, like after knowing all this, if I get a job, so my salary package is maybe like 12 lakh per annum. So what should be my savings for retirement be like if I want to retire at consider like 45? Like if you consider all the aspects like heavy taxation and inflation.
Ravni, a very important and interesting question. You have covered two very important things here. One is retirement planning and one is inflation. Retirement planning, it's not important how much you are earning. How much you are saving is more important for retirement planning. What we could do is, say we can take your present day expenditure, add inflation to it, and maybe 20 years hence we can arrive at an amount which should be your retirement corpus. But since you are youngsters, you'll have to keep revisiting that retirement planning once every few years. Once you have arrived at a corpus that should be my retirement corpus, then you start working backwards and calculate as to how much you should every year or every month. And if you need to increase that saving in between, you have to increase it. But what is very important is, because you're just students, and as you get more into life, the expenditure part will go on increasing. So you'll have to revisit your retirement calculation once every few years and see to it whether it is on track or not. That's all. And inflation, a very important question you posed, which quite a lot of people don't understand, is fall in the purchasing power of the currency. Say if I am paying 10 rupees for a bread this year, I'll be paying 11 rupees for the bread next year. That is inflation. One very important thing also here is, as the country progresses, your luxuries will start becoming cheap and your necessities will start becoming expensive. For example, I traveled before my wedding to Bombay. It costed me 7,000 rupees from Bangalore to Bombay. Today, the same trip is costing me 2,500 rupees. So luxuries will become cheap and the necessities will become expensive. The cost of dal will go up, but the cost of traveling or buying a TV comes down. So you have to beat inflation. And if you keep your money in a bank deposit, you don't beat inflation. Nobody has become rich by keeping money into a bank deposit. A saying by Warren Buffett. Nobody has become wealthy by keeping money in a bank deposit. All you can do is you can protect it. That's all. It's not gaining. And over a period of time, it is losing out, because inflation is taking out a major portion of that growth. I think bank deposit today is giving you a return of 5.5%. The inflation in the country is around 6%. One more thing which is very important here is, there is a very important lifestyle inflation. Lifestyle inflation is what you pay for your children's education, or what you pay for your children's marriage, or what you pay for maybe a hospital bill, or it is not included in that regular 6% inflation. So lifestyle inflations are becoming more and more important, and they have most effect on your savings. So somehow you should invest into an instrument where you beat not only the inflation, the basic inflation, but also the lifestyle inflation.
Well, that sums it up, I guess. Like saving is most important. So yeah, we should always consider saving like rather than spending. So how much ever you earn, you should try to save more.
Save and invest. You save money and you invest that money.
Save and
So I think what most people are now wary about, and also what I think the biggest elephant in the room right now is this COVID-19 pandemic. The fact that we aren't in the same room interviewing you is an issue, let alone investing worldwide and investing where you can't be present with your advisors and your providers and all of that sort of difficulties. So now I like everything else in life, many things have changed. So how has investing changed with regard to COVID-19? Are there any options that I should consider to invest, considering the consequences of COVID-19?
Ibrahim, this question was more relevant last year. There are many companies which are pandemic proof. Before that, I would like to say, stock market is one institution which was not impacted by the COVID crisis. It was always open for the number of days it's supposed to remain open. It did not close even for a day due to COVID. Now there are quite a lot of pandemic proof companies. Companies like pharma companies where you can have an exposure. Companies like software companies, which in fact stood to gain from the pandemic because there was a lot of work from home. They were able to cut down on cost hugely. And there are quite a lot of foreign companies you can invest into. Companies like Netflix, companies like Amazon, they were able to take benefit of this pandemic. Moreover, I feel pandemic has taught us to have a little bit of our savings into liquid funds, which can be converted easily into equity. Say if you have a house, if you have a property, in pandemic you're not able to sell it for the next 1 year. Otherwise, also it requires a lot of time to sell a property. Due to pandemic, how much ever rich you are, how much ever properties you have got, unless it can be liquidated overnight, it's a very difficult product to be in. And that facility only stock markets and mutual fund gave it to you. The money can be liquidated, the money comes to your account. Some of the investment can be liquidated in a day, next day money comes to your account, and some of the investment 3 to 4 days it takes for money to come into your account. Everything is done online. Every the transaction process is done online. All you have to do is redeem it. The money comes to your account within 4 working days.
So what I've understood is that liquidity is important, and there are also industries that can prevail, not specific industries, but depending on situations, the focus shifts towards different industries. So right now it was towards software and say pharma companies who honestly have done quite well. So say tomorrow, God forbid, tomorrow some other uh, situation comes up, so the focus changes towards that, and you have to be sort of flexible enough, and you have to be smart enough to move towards those sort of industries, and that I think is where the trading comes in place. So that was a very big takeaway.
Should I take health insurance while at my first job? Like health insurance of 20 years, and so which is a very, very long time. And a lot of things can change in the span of time. Like maybe the company goes bankrupt, major political changes, etc. So after considering all these, is it still worth the investment?
Crowley, I feel health insurance is one of the basic necessities of life. Everybody should have it. And health insurance products are not 20-year products. Health insurance products are something like a vehicle insurance. They are a 1 year product. You have to renew it every year. Only in few cases it becomes 3 year product. Normally it is a 1 year product. And if you feel 1 year, and there is one more very good thing in health insurance, you can port it. So if you're not comfortable with the company, you feel the company is not doing well, the company might go down, you can always port it to another company with all the benefits that you were having in the previous company. And it's a 1 year product. You can take up some big companies like I don't know, they not been a, but look at some big corporations. They have got health insurance companies also. You can take it up with them, and it's a 1 year product. You can always shift it if you're not comfortable with a particular company. Shift it to another company. Portability is very important thing. A very big reform you can say in health insurance business. So my suggestion is, irrespective of you don't have a choice, you have got to have an health insurance, and don't depend on the health insurance provided by the employer. Apart from that, also you have an health insurance in place. Plus, you have the benefit of claiming tax deduction for that particular investment that you're making. So overall, it is a win-win situation for everybody. You should have one.
Right, health is always a priority. So like I think everyone should have in health insurance first. The first thing they should get when the job is health insurance. That was a very good answer, sir.
Sir, I think most people present on the meet today are college students. So the next generation of investors who have been influenced a lot by, say, pop culture, and also we have heard around so frequently, it's almost become second nature. But then we don't really know the depths of these terminology, things like what is a share market, and adding on to that, how do I become an expert, or how do I do well in the share market? How do I master the share market? But then if I ask, say, in the previous generation, if I ask my father, where should I invest my money and my earnings in? He would probably say, invest it in the real estate market. It is quite stable, good returns, and you can always have the property for other purposes. So how different is, say, the share market from the real estate market?
Ibrahim, you've got multiple questions into one. What is the share market and how share market is better than a real estate market? Well, share market, the biggest advantage is, now let me tell you what a share market is. Suppose Ibrahim, Crowny, Abha, Surag, myself, my daughter, my wife, all of us join together and start a company. All of us will be putting in some money in that there. And we start a company. And tomorrow the company is doing very well. And say Crowny wants to come out of it. But nobody else is in a position to buy her share. But she wants to come out. So what do? We get the company listed on a stock market. And she puts in the sale price there. Anywhere from India, somebody can buy it, or anywhere from the world, anybody is interested in buying it, she can buy out her share. So, in layman's term, I would say share market is a place where businesses are bought and businesses are sold. It's a particular share of a business. My share of a business, if I want to share, if I want to sell, I can always sell it on the stock market. It's a place where share of a particular person's share in the company, and it is highly regulated. There is a regulator by name Security and Exchange Board of India. You must have heard about it. It's a highly regulated market, and most of the companies have to comply by the restrictions that have been placed by SEBI. They have to overall listen to what SEBI says. So highly regulated market. Unlike a real estate market where there is a regulator, very recent regulator called as by name RERA, regulator and some authority of India, it is called Regulatory Development Authority of India. But it is still work in progress. It is just started. It is something which has come up just now. And one more thing about real estate is you cannot sell a part of that real estate. You have to sell it in whole. You have to sell that entire property that you have got. You cannot say, I sell 100 square feet of 10 square feet of that property, which is around 2,500 square feet. You cannot sell a part of it. Unlike in a stock market or a mutual fund, you can sell a part of the holding. You can sell a part of the holding and come out of it. Plus, one more drawback which I see in real estate, of course, nothing against real estate. The opinions expressed here are my personal. I feel there's a huge involvement of cash in a real estate market, which is bad for everybody, which is bad for the Indian economy also. Huge involvement of cash. And one person having a lot of properties is again a bad idea. It is of no use to anybody. It is actually money invested in a property which stays there. Nobody can utilize that investment. Whereas if you invest in a share market, the company gets your money. It in turn uses that money to increase the production. You are in turn helping the Indian economy by routing your money into the stock market, either directly or through a mutual fund product. So in my case, I feel a stock market or a mutual stock market is always good, but stock market, since you're not aware of what stock market really are, you route that investment through a mutual fund where there is a fund manager. He manages your money. His job is to manage money. He's got a research team which comes out as a research report. Based on the research report, the fund manager takes a call and invests in a particular share. Now, I would like to share an example here. When I started with mutual fund distribution, I had attended this program of one of the mutual fund companies. They said the research report, the research team came out with the research report saying that diesel cars are being sold more. So what? But we are holding shares of a company which is making batteries for petrol cars. So they shifted their entire holding from their holding of batteries into diesel car, petrol car into that of a diesel car. The price of that battery manufacturer that is manufacturing batteries for a petrol car is still the same, almost after 10 years. But the diesel car one has gone from almost grown 10 times. Again, I'm not supposed to take the names, so I will not be taking names. My apologies again. I have to follow the diktat of the regulator. You can, with a small amount, you can start an investment into stock market. Into real estate, you require huge amount of money.
So I think that was very eye-opening, but also I think if you could add on this, like I think most people are quite comfortable with real estate because it is a visual quantity. You can see, here is my plot, here is my house, I have earned this much, I have this much value. But then say something like share market, something like stocks or mutual funds is still a bit more reliable if you ask an Indian audience. But something like say shares and stocks, if you tell somebody that I have this much stock, I have 1 crore worth of stock, they'll be like, where is it? I see nothing but empty pockets.
Ibrahim, I would like to add this. It has got more of a social value than anything else. You will be satisfied with your investment to stock market or mutual fund because you are aware of the fact that you have so much with you. But then you cannot talk about it. What is visible is the real estate. You can feel it actually. I'm not saying it is a bad investment, but after you have exhausted your other avenues of investment, you can go in for that. Not as a youngster. Suppose you have invested in Suratkar and tomorrow you get a job somewhere in Japan. Somebody has to take care of that property here. In share market or mutual fund, that money will be in your demat account. It will go along with you. It will be in the cloud.
Yes, sir. That was yeah. It seems like share market is the thing of the future, and real estate, past, present, and future. But I think we should look to diversify, and it's a good option to have.
Okay, Ibrahim, the name of the regulator, I was not able to recollect it. Regulatory Authority, RERA.
Well, after knowing this, like I guess everyone here must have heard the name stock, like in once in their life at least, and most of us know about stocks. I'm talking about the students, which is the major audience. So now, if I, as a student, how can I start investing in stocks right now? Like, I do not want to wait until I get a job, but right now I want to start investing. What platforms are trustworthy? Because many people might have many suspicions just because of stock market and their money invest.
There are a lot of success stories in the stock market, and there are a lot of stories which tell you otherwise. Stock markets are share market as it is popularly called as. You can, by having a demat and a trading account, you can start buying a share. It's very easy. It's not complicated. All you have to do is have a demat account with one of the companies. Like you can have it with a big company again, but the platforms you might be referring to are also good platforms. They are generating huge amount of cash in spite of the fact that expense ratio there is very less. So you can of course have an account there also. Any trade you do, every day you will be getting messages for the trade done. Keep an eye on it. And that's how you can be safe. If you just ignore it, then you are in for trouble. I'm not suggesting that the company might be trying to do something wrong, but you have to be aware of it. You cannot blame the company tomorrow because the message was sent to you on your mail and on your SMS. So you have to look at the SMS that you received from that particular company and see if any transaction has taken place. The company will send you the SMS only when there is a transaction taking place. So be aware of it. Be aware of do's and don'ts. What you should be doing as an investor and what you should not be doing as an investor. Be aware of it and you'll be safe. Most of the companies are reluctant to deceive the investor because there is a very strong, as I said, the Security and Exchange Board of India is extremely strong to rub the Security and Exchange Board of India the wrong way. They are into trouble if they do it. It is a highly regulated market. So you can take a call, take an exposure into it. But keep a watch on it. Keep a watch on the messages that you receive from the company. Once in a while, go visit the portfolio also as to where the money is, whether actually the number of shares that you had bought are actually there or not. Keep a watch on it, that's all. Otherwise, it's a highly regulated market, and everybody with a demat and a trading account can start it. You can start it on platforms also. Those are good platforms. They are doing very good job. They have, in fact, brought down the concept of dematerialization of shares and trading of shares into the drawing rooms of everybody. So they are doing a good job. I am pretty comfortable with them.
Well, I guess I should start investing from stocks tomorrow. And I guess after this, many people here will start investing. But everyone should be aware and be safe and always keep a watch for it. That is the main important thing.
Ravani, can I add something here? Even
Sure.
if you don't start with a demat and a trading account, you can start with investment into mutual funds. All you need to have is a bank account, a PAN card. You don't even need a PAN card, in fact. All you need to do is get a KYC done. And once you do the KYC, you can start. You don't need to have a checkbook also. You can start without a checkbook with an amount which is as small as 500 rupees. There are companies which are, in fact, allowing you to do a systematic investment plan with an amount which is 100 rupees. So, as a student, my suggestion to everybody is start early. The early bird which catches the worm. I keep repeating it, but then I have not got a better phrase for that. The early bird which catches the worm. So start early. Be an early bird.
So, I think if you see the news and if you see financial, any news channel regarding, say, financial news, and even newspapers, the most common terms that are put forward are these terms called Nifty and Sensex. Those are terms that I've been hearing from childhood, but I have some sort of clarity, but then these are things that sound very complicated, but honestly don't think they are as complicated as they sound. So what do you think these terms are, and also what resources would you suggest to, say, learn about things like Nifty 50 and equity index?
Ibrahim, you're right. These are the words you keep hearing them. They are not as complicated as they are made out to be. There are two stock exchanges in Bombay, two major ones. One is a Bombay Stock Exchange. One is a National Stock Exchange. Bombay Stock Exchange, the index is Sensex. The index of National Stock Exchange is Nifty. Now, what is an index? Index is a statistical tool, something to compare with the past and project the future. Sensex, I'll take the example of Sensex. Sensex has weightage of almost all the sectors of the stock market. It has got pharma into it. It has got FMCG into it, software companies into it, petroleum companies into it. So all of them constitute and make an index. The highest weightage of a company on Sensex is of Reliance Industries. That has got the highest weightage on the index, followed by HDFC twins, HDFC Bank and HDFC, followed by companies like Infosys, TCS. So each company will have a particular weightage depending on the outstanding shares into the value of that particular share. That is called market capitalization. Whatever is the market capitalization of a company, according to that, it will have a weightage on the index. Now, index is very dynamic. Sensex, for that matter, is very, very dynamic. From the time Sensex was formed, it is 30 shares. It was formed in the year 1979. When it was formed, only 5 of those companies which were there initially, those 30 stocks, are there in the index today. Rest of the 25 shares have shifted out and have been replaced by other companies with more market capitalization. This activity of shifting out and shifting is done once in every 6 months. Whichever company has got more weightage will have a place in the index. And one more interesting thing here is you can buy into Nifty, or you can buy into Nifty as an index itself. So if you don't want to time the market and manage the money in such a way, you can buy a share of a Nifty and keep holding it. You can buy it on stock exchange through an ETF platform, or you can buy it through a mutual fund also in the form of fund of fund. By mutual fund, you can invest into a Nifty and hold on to it. So you are in fact investing into the whole of the market with that one single investment of yours.
So, sir, what you're saying is that Nifty and Sensex are basically encapsulations of, say, the entire market. They give an idea as to what the economy is like and what the current situation and market is like. And accordingly, it gives you a factor as to how much money you should invest now, or where, say, what industries are doing well. And it gives you an idea as to where your money should go, how much money you should put in, and these are good factors. And also there is an you could put money into the entire market through the Nifty stock through mutual funds, and that sounds like a very smart idea to do because the market being very volatile, that gives you a very good option.
In fact, by investing into Nifty, you are investing into the top companies of Indian economy. So by one investment, you are covering the whole of the top investment industries in the Indian economy. You don't have to micromanage it then. One investment, you are controlling, investing into the whole of the top companies of India.
So for the students who came here to know about what stocks and what shares to invest in, Nifty is one thing to keep an eye out for. But yeah, be safe and read up on it. Don't put in all your money because we have told you so. But yeah, that is a good option to have.
Now, like, as I keep repeating that our most of the audience is a student. So now can you share some general tips on investing as a student? Because I think after this, many people or many students, like they know everything, so now they would like to invest. So general tips, maybe what to do, what not to do.
This opinion is my personal. They can take an exposure in a multi-cap fund of a mutual fund. Multi-cap funds are meant to invest in the whole of the Indian stock markets. They have to invest a particular amount of money into large cap, they have to invest a particular amount of money into mid caps, and a particular amount of money into small caps. So they are investing into the whole of the market. So by taking an exposure into a multi-cap fund, you are indirectly taking exposure into the whole of the market. One other very interesting way of investing is start an SIP. You are not getting into the market in one go. You are scattering the investment over a period of time. So that's one very interesting style of investing. It's not SIP is not a product. It is a style of investing. Most of the people confuse it to be a product. It is not a product. It is a style of investing. So you can take exposure into a multi-cap fund. You can take exposure through SIP with an amount which is as small as 500 rupees. Here I would like to tell you one more thing is, you do your own research. Like for example, you will come to know that in pandemic, these are the companies which will be least affected by the pandemic. So you can invest in those kind of companies also. You can invest in companies which are running a monopoly kind of a thing. They are top in their business. They have virtually no competitors with them. You can invest those kind of companies also. Say if you have a paint company, which is a very big company, and literally nobody next to it. It is in fact running a monopoly business. So you identify a sector you want to invest into, and then invest in 1, 2, 3, maximum 3 companies of those sectors. Don't go beyond that, initially at least. So identify a sector. Say for example, insurance is a growing sector. Only 2% of the Indians are insured. So insurance is a new sector. It is a growing sector. Gradually, everybody. So the advantages of insurance are so many that everybody will have to take insurance. If not today, tomorrow, everybody will have to take an insurance product. I'm not talking about insurance as an investment. Insurance purely as an insurance. A term insurance, where God forbid something were to happen to the company, something were to happen to the person, the nominee gets the money. If nothing happens, well and good. The person has outlived. He can earn money in that much time. So much money that he can take care of his family. Now take an hypothetical example. There is this person, he's got one wife, 2 kids. Kids are to be educated. Kids are to be married off. EMIs are to be paid. Retirement has to be taken care of. But God forbid something were to happen to this person. How will the family manage the finances after him? So one way of doing it is buy a term insurance. This kind of awareness is coming more and more in the market. When this kind of awareness is coming more and more in the market, insurance companies start doing well. So you look at a sector which is growing, new sector, and invest into that sector. This is my opinion, my personal opinion, that you identify a company which is on the growth of cusp of a growth. Probably where Infosys was in 1990 maybe. So these are the companies, new generation companies, depending more on technology. These are the type of companies you can take an exposure into, a small exposure maybe, and start your investment journey with that.
Well, then we should choose on a sector and then we should invest on it, but we should also take care of the factors like current situation and what the company is going through. We should do like everyone, even though everyone knows about it, we should also do some background research or something. That was a very good opinion.
Uh, Sir, I think one of the major goals that everybody has is to be financially free. That is to be sustainable and also have not don't have many, say, payments and backlogs in the terms of, say, EMIs and loans and that sort of a thing. And also, so how do we how can we become financially free? What is the process? And in a broader term, what does it mean to be financially free? And also, uh, keeping on track of this question that of how much money and how much savings and how much investment I should do to be financially free. What How much equity should I have? What is the equity exposure I should have to, say, be on this track of being financially free?
Quite a lot of experts have this opinion that your equity exposure should be 100 years minus your age, but it varies from person to person. Now, as far as being financially free, if you have taken care of all your expenses, everything is taken care of, your EMIs are paid off, and suppose, God forbid, I'll not take your example. Suppose there is this person, he's taken care of all his expenditure, whether he is there or not. God forbid something were to happen to him, still the family will not come into trouble. That is the time when I can say, you can conveniently say he's financially free. He's made arrangements to pay off his EMIs on time. He's got a retirement planning in place. God forbid something were to happen to him, the family is taken care of. Such is the situation when I say a person is financially free. I tell this to a lot of people. There are three basic necessities of life. It is no more roti, kapda or makan. It is health insurance, life insurance, and retirement planning. Life insurance in sufficient quantity, retirement planning in sufficient quantity, and health insurance also in sufficient quantity. Just having a life insurance of maybe 25,000 rupees is not sufficient. I've come across a person who told me that his life insurance is 10,000 rupees. I said, what will be that 10,000 to be of any use to anybody? Suppose you're not there tomorrow. I was a little blunt with that person, but just imagine a hypothetical situation. What can 10,000 rupees do? And about term insurance, I would like to tell you, the earlier you started, the better it is. You will get a huge cover at a very small premium. For a person of age 25 years, a 1 crore life insurance cover would maximum cost him 7,000 or 8,000 rupees. So my suggestion is, have an insurance cover in place, have a health insurance cover in place, and most important, have the retirement planning in place. If you have all of these three, and you have got money to spend in between, then you are financially free. Have sufficient amount of saving also, which will take care of you in case of situations like what happened last year. In a situation of pandemic, probably people who had investment in mutual funds were most safe because they could convert it easily into cash. You could convert it into easily into, I've just spoken about it, that you could convert it into cash in 1 day to 4 days. So that's where you are financially free. It can take care of all your requirements, whether you're working or not.
One thing I want to bring up was your equity formula of sorts, that it should be 100 minus your current age. You said this is not advisable. This is what is being told, but not your personal opinion. So is it a trend that the older you grow, the lesser things you should own and the lesser equity you should have, and the lesser investments and assets you should slightly move away towards being more liquid in that sort of term?
There is general consensus that equity products and insurance and stock market products are long-term products. So as you grow older, it's always advisable because you cannot digest that volatility that comes with the investment in the stock market. So it's always advisable that you cut down on equity exposure as you grow older. But depends on person to person. I cannot say that specifically this is the way it should be done. Looking at each person's risk-taking ability and his need. Equity exposure, one thing is very clear, that as you grow older, you should move your money into more safer instruments because you cannot digest that volatility which comes with the investment into stock market. Plus, you are getting old. You are not earning money. You are in a phase where you are spending money. So you should have money to spend. If you invest money into stock market and suppose that particular share, the value of that particular share comes down, you will be in a difficult situation because you cannot manage it. You are not earning money anymore. If you have a regular source of income, then it is fine. You can invest into a stock market, whatever percentage you are comfortable with, you can do it that way. But then if you have only when you have a regular income, if you have income from share market or mutual fund, it is always advisable to start moving money slightly away from equity as you grow older. And if that is the only source of income for you. For my dad, and I can give you an example of my dad, his only source of income is through mutual fund. So for him, what I've done is it is less of equity and more of debt. There are products which can give that kind of products also, which are slightly less volatile when compared to an equity fund. So his money I moved into more into debt and less into equity.
I think that clears up the misconceptions with equity. I think it's good to have a lot of equity now and invest, but later in the future, you need more stability. You have other priorities, and there's a lot of things at risk, so it's better to be safer then and be more stable. Is a good term to have.
That's a very important question I'd like to ask. Like, as I am a student and everyone here, how can you maintain a budget for being a student? Like, we talked about investment, but we cannot seem to know our finances. Like, we spend it on, like, if we have to have a dinner or something, we just keep spending money. And students in college. So, like, how can we maintain a budget?
Well, one way of doing it is you start writing your expenditure. So you know what is your income and what you are spending it on, and whether some amount is going towards wasteful expenditure. If you start writing it, you will come to know what amount is going as waste. So cut down on that, and that's how you can manage your finances better. One more thing I would like to tell you is, quite a lot of you must be going out on weekend parties and all. Write down the expenditure. Write down the amount that you spend on that weekend party. If you are going out 4 times in a month, cut down on one of the expenditure. 1 week. 1 week you don't go out, and invest that money into the stock market through the mutual fund route. So whatever amount you save there, maybe it is, I don't know how much is it because I have never gone through that process. 5,000 rupees or maybe 2,500 rupees or 1,000 rupees also. Cut down on 1 week, invest that money into the stock market through the mutual fund route, and you will always thank me for it, for this advice.
Well, I guess every student should start maintaining a budget because it's high time for it, and like everyone will thank you for it.
So, sir, considering that you are the CEO of Investment Funda and you have been advising other people as to how to manage their assets and how to manage their accounts and portfolios, and you have gone from a student a student to somebody who is managing portfolios for other people. How does that process go about? How do you take that jump? How do you go from, say, an investor to, say, people who help other people manage their portfolios and accounts?
Well, my job is that of a mutual fund distributor, and my advice can only be to my clients, and the advice to my client is incidental in nature. As per Security and Exchange Board of India, I can only advise my client, and that too it is incidental in nature. As to how you can go about it, I think there is a very important course done by most of the fund managers. Certified financial analyst is one. MBA finance is one more thing. These two are very important things. If you can do these courses, and there are weekend courses conducted by National Stock Exchange. Now I forgot to tell this to you in the initial stage itself, that there are weekly courses conducted by National Stock Exchange. You can attend those if you want to become an expert in investing or to understand what stock markets are. So weekly courses which are about for a day, maybe on a weekend, it is on a Saturday, from morning till evening it will be there. But highly effective courses, you come across a lot of people who want to do the same thing, and interaction with them itself gives you a lot of information. So my suggestion is, if you want to become a good investor, please attend those courses conducted by National Stock Exchange. You can register with them, you will start, and based on that, if you feel the subject is of interest to you, you can attend that particular course. They don't charge you too much for it, but definitely very effective. So one way of doing it, that is.
So I suppose what you're saying, sir, is that to become an investor, the first thing you got to do is invest in yourself, learn how to become an investor, and then invest in other people and other things. And that's a very good step to move towards investing and financing.
Now, as we are coming to our end, it was a very wonderful session, sir. Thank you so much for sharing your insights and taking up important topics through this session. Um, we see a lot of questions in the live chat for you, so we'll try to address all these questions if it's okay.
Absolutely fine with me.
Is that the first question that we have pulled out of the chat is which trading, according to you, is the best? Intraday trading, positional trading, or long-term trading?
See, all the three are serving different purposes. Intraday trading is you buy in the morning, sell in the afternoon, buy in the afternoon, sell in the evening. The purpose is different. You are buying with very little margin. Say even a rupee of a difference will make a lot of difference in intraday buying. So intraday buying is for different kind of people. You have to be an expert because you have to take into consideration a lot of technical analysis. So if you are into intraday trading, then you have to be technically more sound. When you buy for long term, or when you buy for something like you're taking delivery of the share, it is relatively more easy. You buy a share, you hold on to it, and when you sell it when you get the price back. It is more easy, relatively more easy vis-a-vis an intraday trading. Intraday trading, you have to be a little more expert in the subject. You have to take the help of lot of technical analysis also. So intraday trading is for a different kind of people. When you buy and hold is a better opportunity for a student like you, I think. You buy, hold it for some days, sell it out after some days, after you have got the returns generated by that particular script. So in my opinion, for you, it would be better if you buy and hold. See, if an example again I'll give you. Had a person bought the share of Infosys in 1993, they would have invested an amount close to 10,000 rupees. Today it is worth about 11 crore of rupees. So that is the possibility if you buy and hold. So my suggestion to you would be buy and hold the share. Hold on to the investment.
I think that cleared up the question pretty well. That is, the intraday trading is more has very less room for error and very less margin. So you have to be much more sound technically, and you need to be on a more expert level than say somebody who's beginning. So right now, the better way to go is probably long-term investment.
Well, this is an interesting question. So, how long do you think an investment should be? Like, how long is the preferred one?
Kravni, when you make an investment, have a purpose in mind. Why are you doing that investment? And you can come out of it when that purpose is achieved. For example, if somebody is saving for their retirement, then my suggestion would be just before the event, start moving your money into debt fund from equity fund. So as you are entering into a retirement phase, you are more into safe instruments. So with a purpose in mind, and as you achieve that purpose or you come closer to that purpose, start coming out of that particular investment and get into a relatively more safer instrument.
Well, yeah, you should also always have a purpose in mind.
One of the other questions that we have found from the chat is that So as we are starting from minimal amounts in terms of saving, as we have just as we would just be placed and we would not have that much money in our accounts, what would be good investment options with, say, these limited amounts in the short term and also in the long term?
Any investment you do, you should do with an intention of long term in mind. Because short term it is highly volatile. Short terms are highly volatile. Again, as I gave you an example of Bombay Stock Exchange, when the index was formed, it was 100. Today it is at 50,000. In between, we had two wars, assassination of two prime ministers, n number of financial scandals. In spite of everything, the markets have only gone up. Short-term markets are highly volatile, more stable. So when you are making an investment, if it is an equity investment, have long term in mind and then make an investment. Also, as students, you can start with an investment which is as small as 500 rupees. You can start an SIP with an amount which is as small as 100 rupees also. And we take a plunge into the Indian stock market through the mutual fund route.
I think that was a question that was half cleared in his in the interview part, as in the SIPs are very important and you can start small, but also he has now answered the fact that you should always look forward to the future and have think about stability and a long term prospect instead of short term dealings.
Another question which I can see on the chat is like, how do I know which is the perfect mutual fund for me? Like people, they do not know which mutual fund. They're always confused in everything. So how do I know that?
Well, one way of arriving at a conclusion would be you take the help of a mutual fund distributor or a mutual fund advisor. Another thing is the fund depends on the risk profile of an investor. If you are willing to take that risk, if you're okay with your capital coming down a little, then you can go in for funds which are highly volatile. Funds like the small caps are highly volatile funds. They frustrate you over a period of time, but when they give you return, they give you phenomenal kind of a return. So it depends again on the risk profile of the investor, which varies from person to person. It is very important that you understand what is your risk profile. And based on your risk profile, you can identify a fund. If you are not comfortable taking risk, then go in for a fund which has got more into fixed income securities and less into equity. But I personally believe a little portion of your investment should always go into the equity market, because equity markets are volatile in the short term, but they give you very good returns in the long term. So again, depends on the risk-taking ability of the investor. There are various funds, and my suggestion would be you take the help of somebody initially at least, till you understand the concept very well. It's always better because there are two forces working here. There is a force of fear, there is a force of greed, and both the forces are to be addressed. So it is very important to take the help of somebody initial stages. Once you have mastered the subject or understood the concept quite well, you can do it yourself. That time it will be much more easier for you to take a decision. So nothing is this particular fund is good. This particular fund might be good for a particular person, may not be good for another person. So it depends again on your risk taking ability, entirely on your risk taking ability.
So as said that it differs from person to person. So how much of a risk you can take, it depends on that.
Um, One question that sticks along the lines of equity that was asked in the chat was, uh, what is the advisable P/E ratio to invest in equity and commodities?
Price to earning ratio, they say, is more ideal somewhere around the region of 15. Today, the price to earning ratio of index is closer to 26, 27. So around 15 is supposed to be good. Anything less than 15 is supposed to be an ideal place. Anything around 12, they say it is time to sell your houses and invest into the markets. So I would say 15 is an ideal figure. Anything less than that is always beneficial. In March 2020, the price earning ratio of the index has plunged to as low as below 15. Anybody who had invested at that time is almost sitting at a return of 100%. So 15 is considered to be ideal world over.
So I think the price and earning ratio has now been cleared as to 15 is a good amount to stay about, and that is the standard that the markets follow, and that is something that should be looked at while investing by the traders and the investors.
So moving on, someone from the chat asked this: what is your opinion on investment on cryptocurrency? Is it sustainable? Like everyone, I think most of the people want to know about cryptocurrency.
Pravani, cryptocurrencies are still work in progress. So maybe we'll keep it for the next time. Next time when you call me on this to speak on this subject, we'll talk about cryptocurrencies also. Okay?
Sure, sir. We'll keep that in mind.
One other question that was brought up in the chat, and that seems quite different to something that has been asked and covered up in this session is, does opening an asset management a company help reap corporate tax benefits on capital gains? Was it not clear, sir?
No, I see, to open an asset management company, you need a minimum capital of 50 crore rupees. Then you will be floating schemes. I mean, in no way it will help you in tax saving. You need a minimum capital of 50 crores to open an asset management company.
In a college environment where even 50 rupees makes a difference on having lunch or not, or having a snack here and there, and the debts we have in, say, canteens, I think 50 crore is a far off dream, and I think it can be something that can be uh, referred to later. Or if you have any doubts, you can, or if you still want to know a lot about it, you can always hit sir up, or you can question, uh, you can contact us as well, and we will try to get your answers.
Well, now someone asked that how much can I invest near 20K? Because like in this world of investment, like 20K is supposed to be like, like a small amount. So how can I invest a mere 20K? Someone asked that.
20,000 could be invested as a lump sum investment also, or you can scatter the investment by initially investing into a liquid fund, and from there on you give a systematic transfer plan into an equity fund. It could be invested into a debt fund also if you are risk averse, but if you are investing into an equity fund and if you still are risk averse, then one good way of investing would be to invest in a liquid fund and from there give a standing instruction to the fund house to transfer a particular sum of money every month or every week or every day into an equity fund.
Well, I think that answers that person's questions.
So we will be now taking our last question, and the question is regarding EPFO, which is Employment Provident Fund Organization. So what is your take on them, and is it a smart decision to deposit a decent share into it?
It's a wonderful concept and you are getting a very good return on it. As on date, you are getting a return of 8.6%, mostly tax free. So I feel everybody getting an opportunity should have an exposure into EPFO.
I think that was a good uh, And that was a question that brought up a different topic to the session. And I think, as Sir said, that is an interesting investment. And the students who are looking to further their horizon should look towards something like an EPFO.
Well, now as we came to an end, on behalf of the audience from NITK, thank you, sir, for clearing up the doubts that we may have had through this question and answer session. Thank you everyone for being here with us and making the session as interactive as possible. We apologize if we missed any questions, as we have tried to cover like as many as possible in this session due to time constraints. Thank you.
Thank you, Ibrahim and Kavrauni, for inviting me. I hope you invite me more and more often. Thank you so much. Thanks to your entire team, man. Nice interacting with you. It was a pleasure.
Thank you, sir. So thank you, sir, for taking time out of your busy schedule and addressing some of the lesser talked issues in India and in an Indian household right now. It was a very good session. Um, we have a question for the audience right now. What is your biggest take on this session on finance? What is the one big thing that you have personally taken away from this session? Please do share your answers on the INCART Instagram account, and the top three answers will be shared on our social media handles. And also do check out IET Incar's YouTube page for the previous escape room session with the former Student Council President Pratyush Giri, and for all things related to IET Incar. This now brings us to the end of the session of Escape Room 2. Hope you all enjoyed it, and thank you so much for being present here.